Hello, you're watching InstaForex News. Today we'll talk about the economic developments in Great Britain. The investors' attitude to the British pound is getting worse fast. An iridescent period of the first months after the elections is left behind, and the observers started worrying because of the influence of the radical expenditures cutting on the economy. Since the time when the new coalition government came to power, the pound has been demonstrating a stable rising. The market participants were greeting the new government duty to reduce the budget deficit, amounting to £156 billion. This action seems weighty for keeping the current rating of Great Britain and low borrowings cost. But now the economic data is disappointing, and some representatives of the Bank of England see higher probability of that a new incentive for supporting the economic upsweep will be needed. Moreover, the inflation remains at a high level and the fears of spending reduction gather pace. All this will disturb the economic rally. Many experts say that all this points to that the pound is to face another downturn period. This year the pound had a lot of challenges. It fell sharply by the time of general elections in May and remained under pressure when the coalition government was formed for the first time for 30 years. A lot of traders were afraid of that Great Britain may lose its high credit rating and even repeat the situation in Greece. Afterwards, the fears regarding the British economy eased. Taking into account the government obligation of expenditures lowering, the country's rating seems reliable. This week, the rating agency Moody's Investors Service announced that the British rating must be untouchable if the fiscal consolidation plan offered by the government in June comes into action. After the elections, the pound recovered approximately by 10% against the dollar, and by the end of September, it has been trading near 1.57. In early August, it almost touched the mark of 1.60 versus the dollar. Since June, the pound has risen by 2% against the major trade partners of England. However, the confidence in further pound strengthening is getting weaker, especially keeping in mind the rising chances of that the Bank of England will ease the monetary conditions extending the bonds purchase program. The possibility of that the U.S. Federal Reserve System would also run the quantitative easing has already struck at the dollar, although low inflation of the USA is mostly to cause such action. Meanwhile, the bonds purchased by the Bank of England may push the inflation upwards. We will be back tomorrow with the next release. Goodbye.